Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now, back to the A1 Trading Show.
All right, guys. Good morning. Welcome back to another show. Hope you're doing well. Hope you're staying safe out here in these crazy markets. I'm going to play my intro music here today. Happy Tuesday to you. Kind of a quieter week in markets. If we're discussing economic news, don't have a ton of it. We also don't have a ton of earnings this week from key stock names. We've got the NASDAQ and S&P flat. Dow Jones is actually down a little bit this morning. I'm wondering why that might be. Let's think UNH, some of the big Dow components. There it is. We found it on the first try. UNH is down this morning, which is a big healthcare, United Health Group Incorporated Health Services, healthcare company, down 9% this morning. And this is a big weight on the Dow Jones. And so the Dow Jones being down here is, of course, being dragged down by specifically UNH. We could also look at like some of the other big Dow names, Caterpillar, Apple. Apple's up in the pre-market, so no worries on Apple. NASDAQ is up a little bit here this morning. S&P 500 flat on the day. The dollar index is just mildly lower. Chinese stocks are down a little bit, and oil is down. I'm definitely stopped out of this position. In fact, I need to send out a notification here really quick. I'm going to go to commodities trades. This one did not work out for me. Oil started out so strong, stopped out on U.S. oil. This one started out so strong for me, looked really good, but then we had some news yesterday from OPEC, which definitely did not play out in my favor. So you can actually see the entry was over here, started out beautifully, completely came down, taking a full loss here on the jaw this morning. And the reason is that OPEC came out and they increased supply expectations for selling. So check this out. Oil prices fall as Israel said to restrain its response to Iran's attack, while the IEA lowers its demand forecast. Okay, so I said that wrong. I don't know that it's about OPEC. There's perhaps some positive news in the Middle East to a degree, but also IEA lowering its demand forecast is going to have an impact. So oil taking a bit of a nosedive here this morning. I'm going to go ahead and stop out of that. And it didn't do what I thought. It put in a lower high. So oil is off the table for me at this time. So there is one positive here, though. Falling oil prices is good for inflation. Remember that lower or higher oil prices do have pretty significant impact on inflation, because when oil prices are higher, like they were in 2022, we saw that be a really big theme of 2022 with Russia's invasion of Ukraine. As we saw that play out, oil prices skyrocketed up to $120 per barrel. And that really triggered a lot of the inflation, or it definitely did not help the inflation situation that we saw in the US and Europe, UK. Many places experienced high levels of inflation due to the rising costs of energy, largely attributed to the war in the Eastern Europe, Ukraine situation. That being said, oil supplies have been increased pretty significantly. The U.S. creating much more oil, other places creating much more oil to sort of combat that. And we do see oil prices now trading around 70.8 per barrel. So that being said, oil prices coming down are helpful to the inflation story. When oil prices are rising, everything sort of rises in price. When everything is, or when inflation is, when oil is falling, inflation can potentially cool off and prices won't go down, but they won't go up as quickly. And that is one key thing you have to remember about inflation. Even if inflation goes down, it doesn't mean prices go down. It just means prices go up slower, which I know everybody would like prices to go down. Unfortunately, the only way you get prices going down, historically speaking, is usually when you have a big recession and lots of people losing their jobs and people can't pay for anything. That's usually when prices go down. So prices probably won't go down in terms of if you're waiting on the sidelines for, home prices to go down or the grocery store prices to come back down. Unfortunately for all of us, those prices are probably not coming down unless you enter into a big recession, and most people will lose a lot of jobs in that situation, which is not something you want to trade, right? You don't really want to trade lower prices for no job. It's not great. What's up, Ross? Thank you very much for the 199 pounds. I appreciate that. Hey, Nick, you need to check out FX Alex G 100 to 100 million. That's easy. Chump change. $100 to $100 million or to $1 million. That's easy. I'm just kidding. I'm being completely sarcastic. That's kind of crazy. I'll have to check that out. Good morning, Nick. Dollar CAD has skyrocketed. Yeah, let's see what's happening with the dollar here this morning. So dollar index is kind of flat, but USD CAD specifically continues to go up and up and up. Look at that. This has been one that I've wanted a pullback on it for a while, and there's just been nothing. No pullbacks for dollar CAD. Just been a straight shot here. Really strong price action. Euro dollar is another one I've been looking for a pullback on. I'd like to see if I can get like this retest of support turned resistance. I like that for a continuation play on the euro dollar. But we'll see. If we come back up into that 38.2%, I like that for a possible sell on the euro, as long as the edge finder is still confirming it at that time. Let's go look. Are we getting euro? Yeah, we are. Euro dollar bearish readings are still intact here. So if we get a pullback on the euro, that might be a setup for me. Crazy, you did it in 3 to 4 months. I mean, the only way I know you could go $100 to $1 million, you probably have a 0.01% chance of it working out, but you could like buy super, super out of the money calls on the VIX. And if it hits, then great. Not to burst your bubble, but he didn't actually turn $100 into $1 million. Ross, I would actually love to see like broker statements. That'd be so cool to see, but I have, I have my doubts on it. I'm not being a hater. It's just that, if he's showing you something on MetaTrader, you can't believe a single thing you see on MetaTrader. The whole platform can be uprooted. You can build your own server and put whatever numbers you want into it. So it's like open source. So it is not a platform to, and I'm not saying, that person can or can't trade. It's just that you can't believe MetaTrader stuff point blank period. It's if somebody shows you a MetaTrader as like their proof of their performance, just run away. Anyways, let's take a look. So in terms of setups currently, we got euro dollar bearish setups, euro pound. I like that. Kiwi Swiss, euro Swiss, Kiwi dollar. On the bullish side, we still got the Dow Jones, NASDAQ, Bitcoin, Nikkei, SPX, Pound Aussie, USD CAD. And I'm specifically mentioning the ones that I trade the most. I actually don't usually trade minor currency pairs. So if I take that out of the equation, is the edge finder going to crash out on me for that? If I take out minor currency pairs, I'm left with just, there you go. These are basically my current watch list setups. Euro dollar looks really good on the short side. Bitcoin looks really good. Did you guys see Bitcoin? I put something in the Telegram. If you're not in the Telegram, by the way, join it for free. I want to show you guys something. I dropped this chart this morning in our Telegram channel. Look at this. So Bitcoin, looking like it may want to break out of this range. I called this out in our Telegram channel. If you're not in there, we'll drop the link. You can join it for free. There is the link right there. So yeah, is Bitcoin going to do the thing? It's been stuck in this range for so long, and we finally started to see last few days a nice push to the upside. I sold puts on Bitcoin through the ETF BITO. I can show you that really quick. Let's go to positions right here. I know it's a little hard to see on the screen. I sold Bitcoin puts through BITO. And that is going to probably be looking decent today with BITO probably jumping up. Yeah, Bitcoin ETF here. So I sold puts down here. And of course, price going up means that those puts become less valuable. And because I shorted the puts, I shorted 10 contracts, we have a max profit potential of like $650 or so, $660. So we'll see if that can catch a little bit of a bid there. But Bitcoin looks good. I actually really like the idea of a possible trade setup on Bitcoin, more on the active side, even like a momentum trade. So what I'd be looking for here would be this level to actually like break out and become support. So if we get something like this, if we get something like this, like a big break through these highs and really clear this downward trend that we're in, I love that setup. I think that you're still in sort of risk on territory with the stock market. So if you get something like this, you get like a 38.2% retracement. I love this setup quite a bit. But I've been waiting on this channel to break for some time. And so we're finally looking like we might actually see it. I already do have a Bitcoin position, but I'd be willing to add like a momentum trade with a stop on it. If you get something like this, looking for continuations, stops would probably go below structure. Just look for an opportunity to trail stops and see if we can catch a runner. Yields are lower this morning with oil. I want to show you guys something. This is maybe a little bit advanced, but check this out. I noticed something today because oil went down with yields. They both went down together. What are yields? Yields are what is offered by the U.S. Treasury for you to buy bonds. It's how much you get paid to hold bonds, right? Yields are incredibly important to Forex traders, to bond traders, and to stock traders. It is important for all of us. Yields are like arguably one of the most important things to actually study because the dollar trades basically off of yields. Yields are, again, what the Treasury is offering for bonds. It's been declining, but I noticed, I actually did a study, and you guys might find this interesting for those of you guys who are fundamental nerds like myself. Check this out. If I take a 200-day correlation coefficient and I use oil to check if there's correlation between the 10-year Treasury bond yield and oil prices, look at this. You get a pretty neat chart. For the last few years, there's been a very positive correlation between oil prices and the 10-year government bond yields. Now, why is that important to us as traders? Why should we care about that? Well, it tells you that if inflation goes up or down, of course, that's going to impact yields. If inflation goes up, yields go up because then, without getting too far into the weeds of this, if inflation goes up, dollar goes up. Why does it go up? Because yields are going up. The Treasury is offering higher yields on bonds if inflation is higher, right? Because again, if you're a bond investor, if inflation's higher, that inflation is eating into your investment return. So you want a higher premium. You want a higher return to buy that bond. That's how the bond market typically functions. Well, what we've noticed is that, look at this. As oil prices go up and down, long story short, where I'm getting to with this is that when oil goes up, inflation expectations go up. When oil goes down, inflation expectations go down. So we've seen oil down 2% today. Lo and behold, there is some positive correlation here between yields and oil at least in the last 200 days. Now, we could also actually extend that out, and I bet you probably see some positive correlation between the dollar itself and oil prices. Very, very interesting. So do you guys see where I'm going with this? We've got oil prices moving down, and the dollar and oil have been pretty positively correlated over the last year or so. Can that change? Yeah. I mean, if you look longer term, there's periods of time where that correlation breaks down. But in recent times where inflation has been all of the focus, oil prices and dollar are moving together, which I think is really interesting. Anyways, kind of a in the weeds topic for this morning, but it's important. We have a quieter week in terms of economic data, so I figured we could do a little concepts on that. US 30, this is the Dow Jones Industrial Average, which is down here about 0.75% this morning. Dow Jones has been struggling a little bit here recently compared to like the NASDAQ, which has had a real good run. S&P's been running real hot recently. You get the Dow Jones, the Russell down a little bit here this morning. Dollar index down just modestly. You've got Chinese stocks down here this morning. Gold is flat on the day, still stuck between this range. And on the 4-hour chart, I don't love the chart for gold here. Dollar index, daily chart for gold still showing some pretty strong support. I'd be interested to see if we can break through those highs, if that could get us to sort of just continue the trend that we've seen that's been pretty dominant this year. On the bearish side, if you start seeing a break of this trend line and this break of support here, then you might start seeing a bigger correction or pullback in gold. I'm not betting that that's going to happen, but if you are a bear on gold, if you're looking for bearish setups, my opinion is I'd wait for this. I'd wait for some breakout proof of concept here that's actually going to reverse before trying to call the top. So, terms of setups, like I said, I really like Bitcoin. I'm already in a NASDAQ bullish position. The Dow Jones is another position I'd be interested in if you get a nice pullback there. S&P 500 looking strong. Nikkei, dollar CAD is one, but it's gone so far that I have to wait for a pullback. And Euro USD is the same thing. Looking for sells on the euro dollar, but euro dollars it's going to have to come back to me in order to find a setup. Specifically, what I'd look for is this 38.2%, which is a ways away. You're talking about a 87, 88, 90 pip move to the upside before there's any sell side opportunities for me on the euro. But I do like that trade. Just keeping the chart real simple here. I'd be looking for probably stops above the 61.8% retracement from this move, if this is in fact the bottom. So if this is our move, we get a corrective move up into this range, this is what I'd be looking for. This is where I'd stop out, most likely. As long as there's a contingency here, as long as the Edge Finder still gives us that reading and economic data hasn't drastically changed at the time of that setup, that could be a possible idea for me. Dow Jones given a nice dip buy opportunity. Let's go back to the Dow for just a second. Down 0.77%. It is pulling back. I think I'd probably have to wait a little bit more downside here. If you're looking just for this thing to just trend, maybe this is all the dip you're going to get. It's been very brief pullbacks recently, but I do think you could see a pullback into that 38.2. That is possible. If that happens, I may look at a possible setup. Also, let me fix my fib settings here. Middle, there we go. Okay. Yeah, so a lot of the indices for me are they're pretty extended. Doesn't mean that I think they're going to continue, but they are a bit extended. So I wouldn't be surprised if you get sharper pullbacks. On my NASDAQ position, I've got my stop loss trailed just below market structure here. I entered right around here. I'd love to see this thing just continue to push higher, in which case I could, continue to trail stops. But I'm just going to let the market do its thing. If it corrects and starts breaking support levels, I'm just going to take profits, potentially wait for a deeper retracement to try again. We'll see. But we're getting some pretty strong readings on the Edge Finder for indices right now. So I do want to stay long I want to look for opportunities to potentially add the Dow Jones to the mix if you get a deeper pullback on that. Nice start here to the pullback. We'll see if that does continue. That was a nice Nas catch. Yeah, we're looking decent on the Nasdaq. We're going on day when did I get in this trade? Whoops. Day 14, day 13. So I've been in the trade for a minute, but I do think that it has, more room to squeeze higher. The Nasdaq is this is the QQQ, which is an ETF that tracks the Nasdaq. And when we look at this here, you can see we're still a ways from our all-time highs. I do think we probably go back, even if you're cautious on this. I think it's pretty fair to say, I think we're going to likely test the highs for the Nasdaq before end of year. Now the question is, do we break those highs and continue the run, or is that going to are we going to stall out and potentially, give back some gains towards the end of the year? That is yet to be seen. My opinion is trend is to the upside. I'm going to stay long. I'm going to ride it for what I can, but I will just trail stops, manage risk, and if the market reverses, I'll take profits. So we'll have to wait and see on that. But yeah, we got the signal on the edge finder. That is where I then looked at the chart, found that pullback setup. Once it was there, I jumped into the position. So that's how I found that setup. By the way, if you guys want to try the edge finder, we'll drop a link here in the chat. If you would like to find out some information about the edge finder, if you'd like to learn about it, there is a free course that is available when you sign up for a trial. So if you'd like the free course material, the trial itself is not free, but if you'd like to sign up and get some information about the edge finder, we'll drop the link here in the chat to where you can take a second to just fill out that application, and you can get all the information about 30-day trial access, our free course on how it functions, etc. But it is the primary tool that I use each day to find my setups. Vader FX says edge finder is a gem. I appreciate you. Thank you very much. Edge finder is not a holy grail system. I say this, every day, but it is important to note it's not a money printing machine. There are times when, I take a setup, it completely flops. Like for example, oil was a bullish setup. I don't think it's on there anymore. So oil was a bullish setup that I took and stopped out of it. Market sold off here, but my entry was like right here. Market went in my favor. I trimmed my stop loss a little bit. Like I reduced my risk to like right here. But then the market completely reversed here with some unexpected news this morning, and I stopped out. So I took a loss this morning on the oil side of things. Am I looking to get back involved in oil? No, because I lost the signal, right? The edge finder's signal is no longer there. So I'm just going to look for new setups. Gold up 0.07 here this morning. So gold's not doing too much. Oil's a big mover here today, down 2.5%. That's a pretty big haircut for oil considering, yesterday we were down a bunch too. I don't know if you guys saw that, but when that news came out, it was like down 2.5% in the blink of an eye. It was real fast. What's up, Nick? I really appreciate the fundamentals. I've been trading for 2.5 years, purely technical analysis, but since I've added your fundamentals, I'm a lot more comfortable with my setups. That's awesome. I'm really glad to hear that. I think that one thing for, even if you don't really trade using like macro, using economic data and stuff like that, even if you don't full blown, convert to, our religion over here of fundamental analysis, just understanding like why charts are moving, like the real reasons that they're actually moving is pretty cool. Now, I do think that if you become a full-blown convert, if you become a fundamental analysis person, what happens is the market starts making sense. Like you start being like, oh, okay, so the move in oil is happening over in the Middle East. Something might be happening. Or perhaps, when you look at the S&P 500, the NASDAQ, you say, why are these things just going up and up and up? Well, you understand why when you're a fundamentalist. So we can list a couple real quick reasons why gold is up this year. We can talk about why the NASDAQ's up this year. And if you understand these things and you're riding these trends, for me personally, that's where the significant majority of my results in the market have come from. Understanding the why behind where markets are going, not just, oh, the chart's moving up or the chart's moving down. You're missing the story. What is the story of the market? And the story this year for the NASDAQ, for the S&P, for gold, et cetera, is the Fed is cutting rates and the economy seems to be doing just fine. You add those two things together, economy looking okay, and at the same time, you've got stock earnings looking strong. You've got GDP growth still in the U.S. economy. It makes sense why these things are up. They're no longer just like drifting to the upside, and you have no idea why. Like if you are applying the macro to your trading, you're not so confused. You're not just staring at a chart and hoping you're on the right side. So again, if you are trying to bring fundamental analysis into your trading, I've been there and I know that it is very daunting. It's a lot of stuff to look at. That is why, once I've, done this for years and years, my background is in software engineering. We've gone back and built tools to try and simplify the process, to understand what GDP numbers mean and how they impact the markets, to look at NFP, not just from oh my gosh, it causes the markets to spike, but rather, what does it actually tell you about the labor market of the United States? Is it growing? Is it shrinking? How does that impact the dollar? How does it impact gold? Once you start understanding these things, and again, I know that it can be daunting at first, but with the right tools and the right education, fundamentals can be a game changer for traders who are struggling with just technical charts only. If you're somebody out there and you're like, dang, I only look at technicals and I'm losing money and I don't know why, what is the risk in just learning about fundamental analysis? Go to a demo account, learn about why the charts are moving, and what you will start to see is the markets will start making sense. If you're confused, if you're out here just losing money, you don't understand why, it is a lot to learn fundamentals. I'm not going to lie to you, but if you're serious about this stuff, it is worth your time, in my opinion. So anyways, we'll see what happens there. I mentioned it earlier. If you guys want to try out the Edge Finder for 30 days, it is not free. We offer a paid trial for 30 days access. It's a low cost fee to try it out that allows serious traders to try it and for us to not waste our time giving out trials to people who just want free stuff. Unfortunately, I'll tell you why we don't offer a free trial. We had people, what they would do is they'd sign up 1 week, and then when their trial would expire, they'd sign up again with a different email. So we'd end up just giving out trials for months on end to the same person who thought they were slick. So we decided, okay, if you're serious about the Edge Finder, if you want to try it for real, you can try it, but it's a small fee to pay. You get 30 days access to the tool. And then that way we know you're serious and we can help you out alongside your journey. Someone from our team will work with you to make sure that the tool is making sense, that you're learning something, and that you're improving because you have the Edge Finder. So if you'd like access to the Edge Finder, there is your link to apply for it. And if you're serious about fundamentals, it's a great tool to get started with. Guys, we're going to take a quick break, and then we're going to pass the stream over to Ivan FX. He's coming on to talk charts. We got Yen Man in the building. So stay tuned. Yen Man coming in hot with some education and charts for you in just a second. Stay tuned. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. Whoa. Hello, everyone. I'm the Yen Man. And I guess I've been that for quite long. So maybe I should just go back to what I actually am. What am I? I am just Ivan FX. So long story short, sorry for being MIA for the past 2 days. I probably will be continuing. There is some family issues going around. Just gonna say nothing more than that, other than I'm sad. So if I'm not happy today, I'm sorry, but I'm trying to be happier. What I'm looking at the moment, I'm looking for continuation on the yen pairs, and I'm kind of getting a pullback. I'm kind of getting, at least some better pricing. I saw this morning it was falling. I'm like, ew, great. That is what I want to see. Other than that, we are a bit higher than currently. But as I'm going through, as I'm showing you, what is currently happening is probably pound yen, euro yen, and like Aussie yen are kind of situation we should look into. Now, the only problem is on Thursday we have the ECB, and that's going to send euro lower or so. It is what it is, I guess. So I just have to wait for that one to kind of come along and figure itself out. Yen man, how? What do you mean? Because I always trade yen. I do yen, and me and Waiter we're best friends. We have cold call every time. When he's about to do something, I'm on the right side of things. Every time he does something out of the ordinary, mark, he's like, "Whoa, what's going on?" I'm like, "Hey, I told you." UJ might make goal. Do you still remember, Ivan, why the Fed would not cut rates if the dynamics are strong? You said it will cut. Can you explain? I might be wrong. The Fed both said they might hold in November. Yeah. So you have a couple of very bad. You have very strong economics in the United States at the moment. So it's just that inflation keeps everything for a rate cut. So if I remember correctly, if you look at growth, if you look at GDP growth, I believe that is about 3%. Yeah. If you look at labor market NFP, that one came at 254, which is a very good number. And if you go to inflation data, CPI year over year, it's about, I think it was 2.5 or so. That is 2.4. Okay, fair enough. So the major data is telling you we're actually not in a horrible place. And inflation has come down, and it's kind of the only one. If you look at ISM, you have now the highest PMI for the past, 1 year or so. So you are maybe in a position where the manufacturing, which is a bit less important, is a bit less. But my point is, we are generally too strong for massive rate cuts. Now, the question is, are we going to do a rate cut in November or not? That's kind of, it's tricky. If you ever married, and if you ever have a sister, are you going to tell her that she has food on her face? Because if you do, she'll be angry at you, and if you don't, she'll be angry at you. Catch quite shown into kind of situation. So no matter what you do, you're always going to be wrong. That's kind of the Fed at the moment. So if they cut, that might refuel the inflation, and then you have oil on the other side, which was at 77. And I was right; it was going to fall again below what it was earlier. Woohoo! Great. But that is going to lead to inflation in the CPI next month. So if it was going to be up there, so it's the data is conflicting. That's why. So you can do both. So somebody asked for pound New Zealand, and I actually want to go there because I just want to be done with that question, because I want to sell it. Okay, I want to buy New Zealand, which your New Zealand almost came on Friday to my entry. It didn't. And New Zealand CAD, it almost came to my entry, but it didn't. And now we have a higher highs. So, and then I wasn't on the chart yesterday, so I could have bought there probably, but I'm expecting this one to continue until mid-December, I believe. So I was about to get an entry here, and that means also if pound New Zealand, for whatever the reason might be, makes a lower low, I'll continue. I'll look for a short on it. All right. Now, well, okay, we have difference of opinions. That's totally all right. And I believe that UJ is going to go up. So that's kind of the other one because I think yen is so weak. I know the trend is high, but yeah, cool, great. Lost a couple of money on trading yen pairs. I hate that pair at the moment. Korean X Cosmos. Love some deep hot relationship advice I probably give you to your yen. It's gonna be a hate and love relationship, but it's gonna be worth it in the end. You have to push through, you have to talk, you have to be open about your feelings with yen, and you have to come to a common understanding of when to be hot, when to be cold, when to be passive, when to be aggressive. It's not a one-day affair. It's a continuous relationship for quite a long. And when you have been hurt before, you have to come forward to her and say, I feel this and this way, and I feel hurt by this and this way. So, I think you have to. I think you have to speak to Yan. You have to lay out your emotions, and then you're gonna an apology, and then move on. Wow, your commentary is unique. Thank you. You're welcome. But why does the F1 just say buy? Now, where I am, and what I just mentioned, Emiliano, is if pound New Zealand, for whatever reason, goes lower, meaning all the odds is higher. So if H100 is higher, then you probably should look for a buyer, right? Cool. Not financial advice whatsoever. But I said if it continues lower, it'll be at New Zealand strength. And probably more than anything else, if you're looking at any New Zealand, I'm like, cool. Whenever New Zealand dollar, US dollar makes a higher high and starts trending, I'd be like, kapoo! I'll probably take that one instead of pound New Zealand. It's the worst one. And only when New Zealand is weak should I be looking to buy pound New Zealand. So I'm expecting New Zealand bullishness. So I'll probably not buy it. Pound New Zealand, strong and strong, but it is what it is, right? Circle. For Cadian, you just had today, this morning, what is it, 1.6 inflation or so? So I guess it is what it is, but can inflation 1.6, yeah. So buying Cadian, okay, it's all right, it's okay, it's there. It's probably not what I expect to be doing, quite honestly, going forward, because both of them are weak. But if you get a bullish trend, sure. Okay, let me say differently in a better way. I wouldn't currently, because we're not trending. With low inflation as of 1.6 on Canadian yen, on Canada is going to be weak as weak can be. Therefore, a buy on New Zealand Canadian, or a buy on dollar CAD is probably going to give you more than buying CAD-yen, just as a strength-weakness relationship. Yen is making an end structure, no momentum, worst case scenario, crawls higher, just a bit higher. But, okay, to be honest with you, I'm only doing what do you call him in English now? Nick does, or did, or do, or could do, or would do, or is doing, is to follow the trend. As long as the UJ and, for that matter, SP500 is going higher, as long as it's a higher highs, yes, momentum is slowing down, great, but it's currently making higher highs and higher lows. And until then, and in the fact of if it now starts to fall, I'll be celebrating with both of my hands. Because that is the best case scenario. It is too high. It is high. I want it to come lower. I also want S&P 500 to come lower in the same speech. Because we have, I have said it for many times, and I'm going to say it again. And it doesn't really matter if it doesn't happen, but it doesn't. I don't care anyways. With the election, I want this one to come lower because of risk averse. And it hasn't happened. And maybe because both candidates are going to be good for the stock market. Great. But I also believe that S&P 500 has run out of steam. But that's a very dangerous thought because it's going to continue forever higher as long as it does. Okay? That's just my opinion on S&P 500. The market is doing well. The economy is doing well, a bit too well. But this one is set to go higher forever. It's just that pullbacks has been set around September. It has been set around August. And the October pullback has been absolutely non-existent. Now, I'm all for the value. I'm all for a bargain on the S&P 500. And 5,867, which is an all-time high, isn't a bargain for me. Now, I can hope and pray for the longest time, but for as long as we are making higher and higher lows, I have to wait. That is also the same situation for NASDAQ, and for those, I am also having to wait for a pullback. And as you can see, I've been trying to know what if we make a lower high and then continue lower, and that was about right, but then it kind of went higher again. So, if I get pullbacks, not this pullback, I mean 5, 7, 10% pullbacks. That will be much better in my case because I am not here to be putting my money at the highs. So, coming over to trades, as I tried to do before, but me and my brain. Euro New Zealand is something that I'm trying to currently sell. If we're making a new low tomorrow, or if you come up to about 1.79, 800 something, I'll be looking for a short opportunity. That short opportunity was about yesterday. So right now, if it comes back up again, I wouldn't be too happy. Going lower would be the next feasible possible way. Now, with my pivot points, it didn't come to M3, but it just went below central pivot. So this is the best price that I believe through my system, which is 179,910, this price, with the best price to sell, but it never reached there. Target would be 17681. No strings attached. No, what do you call it in English? No financial advice whatsoever, but that's what I'm expecting to be looking for in the coming week, and also for that matter, next week. And the same thing for New Zealand Canadian dollar, which would be a bullish direction, coming back down to M2, which would be, I think it's about, 83.48. Didn't happen. Central pivot came down to yesterday, and then all the way up to 84.80 or higher. Maybe not that direction, more like a bit slower rate of. That's kind of what I'm expecting. So a bit higher today, and then coming back, and then probably got a horrible entry, but I didn't get the M2, and I didn't get the central pivot, so I'm just going to get the third and last entry I'm able to and allowed to do before it should take off. Waiter effects, yeah, fantastic. Have fun with that and tell me the results afterwards. So that's kind of like the decision for me on New Zealand. New Zealand strength. Now, why am I even looking for a buy on New Zealand? Is because where the Fed originally is going to cut, which makes dollar weak, which makes New Zealand and Australia stronger. Should or was or is the theory behind it. Secondly, at this time of year, it is New Zealand and Australia dollar strength and dollar weakness. And as well, at this time of year, it is also a time of, they're cutting rates in New Zealand, which ultimately makes New Zealand stronger because that should boost the economy back up again. So it's a bit weird, kind of opposite mind twist in terms of how things is working. But hey, it is what it is. So what am I even bubbling about yen pairs? Yen pairs are my, not necessarily, I guess, bread and butter. But what am I even talking about? I want bullishness. I have had some dovish comments from the Bank of Japan. They have said that, well, in the direction of maybe a rate hike next year. I'm not seeing any change in that commentary. I might be off, but I've not seen a change in their dovish commentary. Number one. Number two, they're still spending trillions of yen every single month buying bonds, making their currency weaker. We've also seen the pause in the ending of carry trade. So we are back to buying yens again, which started about up there. But on the other side of this equation is the fact that there is a lot of pips in the falls and in the rise. So your 50 pip stop loss doesn't work. Your 20 pip stop loss doesn't work. Maybe 100 pips or maybe 150 pips works in this situation. So the yen pairs have way higher added risk or a lot more pips to cover in terms of hitting your stop loss or putting your stop loss at a reasonable place. And that is, at this time of round, about 3 times the normal volatility. Now, that being said, nothing crazy has happened to the yen. Nothing like it's not dead or whatever. It is just doing what it's doing best, which is doing random things if you don't understand it. So, if I were to tell you what do I actually believe is happening, this is the big fall. We punctured at 90. We came back down again, had a bit of a reversal, and we went higher again, which, it is what it is. Now we have paused a bit, but we are going to re-accelerate again. And if we do so, come back again to whatever, 98, 97, 96, 95, 94, all of that is good for me to look for another reversal and then continue higher again. At any given point, at this point in life, or at this point of the ends, is always an opportunity. If it falls, opportunity to look for a buy. If it rises, opportunity to look for a support and resistance. But at the moment, we don't have that. Okay? What's my thoughts on pound? Pound town is very, in my eyes, bullish. It has a bit stronger fundamentals than the rest of the horrible gang. And I believe that it's going to go higher. It only is, in my opinion, waiting for dollar to change direction. Now, we have seen dollar having a very strong past few weeks. In my theory, is that we are going to reverse 15th of October, which is today. So, if you're like me and you think opportunistically, you're thinking, okay, if I even think we're going to reverse, we've gone into some kind of range bound. We have fallen. We are we're lower, not lowest. And you're thinking, well, this might actually go bullish. Okay. Then, so are you going to look for the bullishness? Catch my drift? In other sense, or in other opinions, or in other kind of way of putting it, this is a sell area, which I would look for. And we are about 250 pips away from a sell point. You can, obviously, make a lower low and then use support and resistance that way. But it's very expensive. So this is the, I don't know, call it fair value gap or whatever. I don't know what to call this, but this is the area that's not been tested. We have to test at some point. So I'll say wait for that one if you're a seller. But in the meantime, I'm a buyer. I think dollar should fall. Nick doesn't agree, I guess, but I believe that pound should go higher. because of a bit stronger fundamentals than the rest of the gang. And, well, we have 2.5 inflation in America, so that should make it weaker. Overall, in the end, we have fallen a bit. So that's kind of my little theory. For euro dollar, we have rate cuts this week expected, and that has set it a bit lower on the euro. And I would argue, great. What I'm looking for going forward is, as easy as it sounds, as difficult as it sounds, a reversal to the higher side. That could be fueled by the aftermath of the ECB. Why so? Because when ECB cuts, what's next? What is going on next? And that's where your brain should also be. And are we going to cut going forward? Are we going to wait a moment? And if I go and check interest rate data, what is it now in Europe? Is it 375 or so? I'm not too sure. Top of my head at the moment. Sorry. Did you know that? Faster and quicker. 365. Okay. So if we have 365 interest rate, we have inflation about 1.8. We are about 1.8 difference. I've said if we are 2% difference, so I'm just going to put those ones up for everyone to see. 1.8. 365 is interest rates. That is CPI. So 1.8, that's about 1.8 difference. If it's 2 or higher, that makes the central bank move. Okay. So we are getting closer to something. So once they do cut another, I bet it's expected 25 basis points or so. If that is happening, I am not so inclined to think that there's going to be a lot more cuts after this. So when the end of the rate cut cycle, the interest rates expectations, when that is no longer, we no longer expect rate cuts from ECB. Yeah. So if we're just going to put this one for you guys here. So this is what I'm basing it off from Forex Live. They have expected 50 basis point. Market has priced in 50 basis point cut, which is 2. So 1 next time, and then maybe 1 now, and then in December. And then 153, which is a lot next year. So once this cycle ends soon, that's when we will start having euro dollar bullishness again. So until then, I'll always be looking for euro dollar bullishness, mostly because of dollar being weak, or should be weak, and cutting, and Europe is a bit later, or has started the cut cycle earlier, meaning it should boost the euro dollar. It's a bit of a mind twist, but there we go. And is it last, Lucky? You're a cat. Are you the last one to say anything today? Where do you want this to go, Lucky? Because this makes no sense to me. Okay, maybe it does. As a bull? Maybe it's bullish theory. But the setup isn't setuping for me. Maybe that's the buy. And that was about Tuesday last week. But it hasn't moved an inch since August. That's really concerning. So when you're looking for a pair for me to look for, or anything, you look at yourself, you're thinking, okay, what am I looking for? You want continuation. You want trends. This is not great. Okay, we're a bit far out, I guess, then. You want reversals of trend. You want to start early. So if you're thinking that this is a sell, then, you have that situation kind of there and there. But if it doesn't move like this situation, you're just going to pay money to your broker for nothing. to be honest with you. Always, I've done pound New Zealand previously, and I said I'm looking for New Zealand strength, though selling pound New Zealand, but it's bullish. So I am not really that interested. Not really that interested into it, to be honest, because it's pound is strong, so, and it's bullish on S500. So yeah, you're welcome. Okay. Did anyone ask about oil, by the way? We didn't do oil. Why didn't we do oil? And why didn't we do gold? Nobody asked about gold. Like, what's going on here, people? Like, have we gone mad? We have not done gold. We are... Come on, people. Oh, how I imagined that one to come down there. That would be the perfect setup. That would be amazing. All right. It's a bit of a pullback, not necessarily by far of how I envision it to be. But that pullback there this morning should be what you were looking for. Okay? You are great in the direction of where gold should go. You have, in my opinion, the fundamentals for it, and I don't know why people want to sell it, because it's bearish. And, it could be a difference of opinions, but, Okay. So yeah, I would love for this one to continue higher. I want a deeper pullback. That's kind of a very high, but at least it's a setup-ish situation where I where we're looking for a buy, but it didn't happen, so it is what it is. Silver, same scenario. Hoping for okay, late to the clan here, but that would be great. But yeah, while you guys are well, I also do the mentorship inside the Discord. So if you guys are there, you can probably send me a message there as well. But if you need more help, I'm there, answering questions almost every single day. But there is also we are mostly there on Friday and Mondays, but it didn't happen yesterday because I was away. But yeah, okay, cool. Apart from that, yen bearishness, dollar bearishness, hopefully soon. New Zealand strength, that's kind of what I'm looking for. Looking for selling Euro New Zealand, looking for buy on New Zealand CAD. And then and after that, we'll see what happens. I really looking forward to the election to get over it and done, so we can look for the risk on moments. Okay, cool. Great. Next one is Chris taking over. So see you soon. Boom.
Oh, Chris Pulver took a trade in our Discord.
Oh, really? Let me see.
Pulver alerts are now available in the A1 Trading Discord. If you want access to everything Chris Pulver is trading, click the link down below or click the link being dropped in the chat now to speak directly with a team member.
Hey everybody, happy Tuesday. Welcome back. Got some activity to jump into today. Pretty interested in a couple of positions here, so you're in the right place. I'm going to start adding some exposure. We do have an earnings play on Snapchat. This has been kind of an oldie but a goodie. An app that has millions and millions of users. Let me take a look at this fundamentally here. So let's go look at the snowflake analysis on Snapchat. We have earnings at the end of the month. Let's have a look. So Snapchat here. So I don't love this. Unprofitable. Not looking to become profitable, insider selling, shareholders been diluted, trading well below estimated value, earnings forecasted to grow. I mean, I don't know how Snapchat is monetizing or needs to monetize. They're clearly lacking in that department compared to, I suppose an Instagram, which is owned by Meta, or even a, Twitter, which is now private. So let's just take a look at a couple other things. Price to sales, price to earnings. It's fairly cheap. Fair value shows here discounted cash flow model getting up to $24. 1105 is not bad. Peer average is 6.1 and Snap's 3.7 price to sales. So the risk that I see is this is not good. Insider selling, which I don't necessarily love. But if we go back to this stock where we IPO'd back in 2017, we were as low as 472 or 490 back in 2018. We had a COVID crash low right around $8.27. We're trading at 1101. The only reason I really like this trade for just a pure speculation is we've got a gap fill at 1274. We've got previous highs that have been tested multiple times here in the last year or so. So here's December 2023. Here's several times this year in 2024 through the summer. That's up to, $15, $16. We have another huge gap up here in the 20s. So I'm considering getting some shares of it now and letting them run as is. I want to see if I bought a put to protect myself through earnings and through any type of election volatility. Is there a chance to lower my cost basis or at least protect the trade? So choices, right? If I buy the shares, then I have essentially 100 delta, which means if price goes up by, $1, I get $1 share in profit. If price pops up here, to 1250 and change, I'm just looking at a couple percentage moves. If we pop up here, that's a 15% move. If we get back to these range highs, that's a 50+% move. We get to fill this gap, that's a 90+% move. Not saying it's going to happen, but technically speaking, we've had some really strong support back into late 2022. So as long as I can kind of protect myself to the downside, and maybe lower my costs into the, $9 zone, $8 zone, that would be good for any type of negative price action that we have in the next maybe 2 months. But if we have upside, I'm trying not to cap that upside too quickly. All right. So let me have a look here. Company earnings, that is Option Slam. Option Slam is where I price this stuff out. So if we look at Snapchat, for example, and earnings is coming up on the 29th of this month. So you can see here percentage-wise, these are pretty big. 30%, 34%, 35%, 23, 26, 21, 17, 22, 24. We got 26 points. I'll just say 25% is the average move. Obviously, the stock's not super expensive. So we've got a $10.98 stock at a 25% average move. You're looking at about 274 average for an earnings report. Now, how many times do we hit 25% over the course of earnings? Well, let's do the math. Let's go out to about 8 days. Use a black line here. Let's go 8 days out. How many times do we hit 25%? This took 1 day, so that did. Day of earnings. This one did not. This one did not. This one gets to 21, but not enough, so that one does not. This one does not. This one does. This one does, and this one does not. So again, in typical earnings fashion, we have 5 that do and 5 that don't. So does that mean this is a great trade? Not really. Is this something as far as a tech or, I do know that Snapchat has a massive user base. How they have failed to capitalize on monetizing it is beyond me, but I don't know. To my knowledge, I think most of the younger demographics communicate a lot on Snapchat. And my 2 nephews, I talk to them a lot on Snapchat. So anyway, I'm not saying that's the reason I want to buy the stock, but it is cheap enough. We've had some pretty good structure here around these like late 2022 support zones that I want to take a look and see, okay, if I buy it here, upside is immediately at 1285 or, all the way up towards like $16 or $17. I'd be pretty happy if I did that. Let me see what this looks like. I don't really want to get it covered, but I think I want to get it protected. I might collar this thing, but not going out super far. So let me have a look at this right here. Also, if interested, I put in a butterfly spread on the SPY this week. I'll put that in. So I'll explain this trade. This is the SPY. I sold a 590 call, and I sold 2 of them. And then I bought a 593 and a 587. I created this butterfly spread. It looks like this. So price is right here in the middle. Price is right here. If price goes higher for the week, the butterfly spread looks like this. So I take this small risk of about 45 cents. Okay. And if price is drifting higher for the week and it gets up into my profit trap, I can turn this 45-cent debit into probably a, maybe a 25-cent credit. They'd be roughly a 50% take profit. Okay. Not too bad. If I turn that 45-cent debit into there's a max profit here of about $2.50. So that's roughly a 6-to-1. If I get this thing nailed on Friday by, expiration or close to expiration of his trading near 590, that's a good way to make, pretty nice return. So I'm just setting a call fly out for the week, and I'll see what price does. But I'm going to keep this where it's like, I'll let price go for the week. And if it gets a chance to hit up to 589 or 590 or 591 by the end of this week, that should turn this into some profit. So I'll keep an eye on that one. So far the day's been pretty quiet. Let's go to Snap. So Snapchat right here. We've got earnings on the 29th. We've got the election on the 5th. We got an expiration on the 8th. If I went out to the monthly expiration, let me see one thing here. So if I buy some protection, so let's say I buy the shares, okay? If I buy the shares and against that I buy like a $9 put or an $8 put, it would be really cheap. So if I buy this put at $8, it's going to cost me 20 cents. So let's say that I buy the shares at 11.07, right? Now, if I buy them at 11.07 and price jumps up to 12.50 or let's say $14, that would be roughly the expected move over that period. You got a $2 expected move. I'm only paying 20 cents for protection. Okay, so if price moves greater than 20 cents, I cover the cost of my put and I'm sitting in profit, right? I'm using the put in case the earnings print is lower and this goes from a 20-cent debit into maybe a 40-cent credit, 50-cent credit, 60-cent credit, and then I can lower my cost basis a little bit further. The reason I don't want to cover this right now is if I buy it at 11.09 and I cover it immediately at, let's say, $13 or $14, that's credit that I collect and that does lower my cost basis, but now I'm going to have to wait for the expiration in order to get the stock called away. And I don't really want to go out that far. If this stock has more upside or during earnings on the 29th, I don't want to have to wait to the 15th. But on my long side, if I buy a put to protect it, I'm probably going to go ahead and keep that time out there a little bit further. So here's what I'm going to do. I'm going to buy some shares right now at $11. It's $11.09. I'm going to buy some shares. I think I'm going to buy 500 to 1,000 shares. So if I buy this times 11.09, I'm looking at allocating about 55.45 in cash. Margin account, you're talking about 27.72 in margin, which I've got plenty of buying power on all these accounts to do that. I've got some cash accounts here. So I think my cash accounts will do 500 shares. My margin accounts will do 1,000 shares. And I think that's going to work. So here's the play. I'm going to go 11.07 or 11.08 for the long shares. So I'll just go in my broker platform, go long stock, buy it at 11.08, and then I'm going to buy the $8 put, which is going to cost me about 19 to 20 cents debit, and then do that out to November 15th as a downside protection. So anything from current price up 20 plus cents covers the cost of my debit. Anything up to $12, $12.50, $13, I'll probably end up taking some profit on the trade. Okay. So, I'd like to see if Snapchat can go up into the, $13 zone. Let's get up into maybe $16 or $17. So I do like the trade. All right, let's get this going. So I'm going to go 500 shares for, there is 2, 3, 4. So 4 accounts for 500 shares and then 4 accounts at 1,000 shares, and then work the numbers, add my protective put at $8. All right, everybody follow me? So I'll get this all posted and updated in the A1 trading community for my Chris Pulver trade alerts. And I'm going to go ahead and issue that trade now. And I want to get protected to the now. I realize that, I'm trading this through earnings. And if I buy the protection now, also if we go down pre-earnings, then I may also take advantage of that. So I'm trying to give myself enough time on this trade to protect. And I don't want to have to go out super far. If I went out to, the end of November, it's going to cost me 24 cents. I mean, it's not a big deal, but I think going out through the 15th, there's plenty of volatility. We've got earnings and post earnings. We've got the election. We're going to have some volatility there. So I'm good with the primary expiration on November 15th, which is November monthly. Okay. All right. So I'm going to be buying the shares at $11. Let's start here. So 500 shares. Okay. 27.52 in buying power. Filled at 11.01. Okay. And then a couple other accounts with that same size. This one here. Okay, it looks like this one's going to get filled 11.02. Come on, snap. 11.03 and 11.03 for this one. Okay, now let's go similar. Bump this up to 1,000 and get those accounts ready to rock. 11.03. Looks like I got to replace this to 11.04. Filled. Come on, dude. Filled. Okay, good. Did that get filled? Yes. And filled on this one, hopefully. Filled, and this one here filled. Okay, so the 500 shares are in, the 1,000 shares are in. Now I'm going to buy that put for 20, hopefully 20 cents. That's out to the 15th. So let me buy this. To cover the whole thing, I'm going to buy 5 contracts on those first accounts. See if I can get this filled for 20 cents, probably 21 because that's the ask price, but let's find out. So I'll buy the 5 contracts here to cover that put. So not filled at 20 cents. I'm going to have to get filled at probably 21. So filled at 21 cents. Filled at 21 cents. Similar order. This one should be for 5 contracts, 21 cents. Filled. 5 contracts, 21 cents. And 5 contracts, 21 cents. All right, now similar. Let's go to 10 contracts and get this one filled on the proper accounts. There we go. And there. There. Did that fill? Oh, son of a gun. All right. I think you need to add some more on these margin accounts. Let me check something really quickly. So Snap is right here. This one's 1,000 shares covered with 10 contracts. This one is, I need to add another 5 here. This one, I need to add another 5. This one, add another 5. Okay, so this account. All right, I need to add in another 5 contracts. Trade. Similar. For this account. All right, so this is 9732. Covered there. Another similar order for this account. And for this account. This should cover everything in full. All right, so here we go. Just double check this. Positions, I've got 1,000 shares covered with 10 contracts. I have 500 shares covered with 5 contracts. I have 1,000 shares covered with 10 contracts. 1,000 covered with 10. 5 covered with 500, or 500 covered with 5. 1,000 covered with 10. 500 covered with 5, and 500 covered with 5. Perfect. All right, so here's the trade. I have the buy shares at 11.04, and then adding the 11/15 expiration $8 long put for protection. This is a post earnings and election. Okay, so I have some protection to the downside. And if we had a move lower, okay, if we had a move lower, then that's enough for me to use that long put. Hopefully, if it comes back down to this level, I can use the long put, lower the cost base a little bit. We're definitely getting a bit more directional on the day. Holy shnikes, this market is making a rip today. I'm just seeing that right now in the last 5 or 10 minutes. My levels starting to light up here pretty big. 228, 207. Is this enough to get me to go long on a put today? Maybe. So let me look at a call fly here, or I'm sorry, a put fly. Maybe a put fly at the 578. This could be relatively cheap. Let me check something here. Let's just bounce around, look at some price. So if we take out yesterday's low, which will be pretty interesting. So we have last week's high right here, last week's low. We have yesterday's gap up, and price is making its way down to it. If this either holds this low or if we break below Monday's low, there's definitely some pressure to the downside. I mean, we've known this. I mean, this thing's sitting at these crazy all-time highs, and any type of pullback that is meaningful. Let's see how anxious the market is to buy the dip. We have then stretched. I mean, consecutive. There's an all-time high. There's another all-time high. Another all-time high. Another all-time high. So we just had this late rally. VIX is going up a little bit today, I'm assuming. I love how I'm already down like 10 cents on Snap since I bought it. Let's go to like an $8, 850 alert. Look at long put. And then on the upside, let's see if we get a gap fill. I'm going to see if we get a wild move up here to like 15 bucks. I'm not trying to be greedy on Snapchat. If we pop up here to fill these gaps at 12.70 or higher, I'm probably going to take some profit. I'd love to see this thing get up into $17. That would be, basically $6 a share, which is pretty good. I've got the protection there if I need it. I'll add this into my pulver alert section. But I'm protected the downside. I'm not putting in anything to the upside until I need to, which means if we go through earnings and through the election and Snapchat really hasn't done anything, then what I might do is look at doing a 20 to 30 day out covered call, lower my cost basis by maybe 30 to 40 cents if I can, and just try to turn this into a very aggressive income play. So we'll see what happens, right? But the reason I want to keep it uncovered to the upside is if we have a reaction during earnings that's positive, I don't want a sell call that's going to change in value, and then I'm going to have to wait for that expiration to get it called away, when instead, if it just goes up in value, I can close that out. All I'm having to do here is cover my 20 cents on that long put. Okay. All right. So that is that. Let's see here. Gamma level wise, maybe a put fly 578. Let's see here. If I did, are we like forming this week's high already? I don't know. It's going to be an interesting day. Let's see how ugly things get. We've already sold off about $4, I guess $3. High today was around 585. We got a low around 582, just a little bit lower than that. So we've sold off about $3 today. We've already made a down move. I mean, down 0.4%, possibly climbing. Qs are down a lot today. Look at the NASDAQ down over 1%. Dow's down 0.5. The Russell's down hardly anything, 0.15. That's pretty impressive. VIX is up a bit to $20. Oil down 2.5%. Wow, that's a big drop in oil. I know Elvin talked about it earlier, but I'm just not loving this oil stuff. Look at that drop here around 4 p.m. yesterday. That's a big drop in oil. I'll go back to the SPY here. So SPY making a bit of a nasty move there. Let's go back to some other prices. So oil. This is why I'm trying to stay out of the oil stuff right now. News. What do we have? Energy stocks declined pre-market Tuesday. Israel said to restrain its response from Iran's attack while the IEA lowers its demand forecast. That goes back to the same narrative we've seen for the last couple of months. Lower demand, drifting oil prices lower. Saudi Arabia wanting to move from $100 a barrel to $50 a barrel. Market share, drive it lower. U.S. and Saudi Arabia are the only two countries that can really survive in the $50 barrel, $40 barrel, and it's going to put a lot of strain elsewhere. This market has taken a pretty big dip to the downside. Okay, I'm just trying to see if this little decline is actionable. It could be. I don't know if we're coming all the way down from a 584 to this is a 585 roughly, all the way down to a 578. I mean, that's a what, $7 move on the day. That'd be over a 1% sell off. I mean, anything's possible, but this isn't really lighting up with a major level here. So I think I'm just gonna chillax for a second, see if this thing calms down. That's also why I changed. I was going long earlier in the morning, and I changed that to a call fly. So I went from a $2 debit, ended up closing out for $1.55. I just closed it out for a very small loss, and I flipped it to a 45-cent debit. So now if I lose on the trade, I'm going to lose $45, and I could be dead wrong. If price comes back into this area at all this week and goes to higher highs, I can turn this 45-cent debit into possibly $2 of credit. So it's a much more favorable reward to risk. I'll see if we get there, but I'm just going to let price just play out a little bit today. Okay, come back to that in a second. Anything on oil? No. Just watch these lows. I'm really not that interested in doing anything with oil right now. I'm happy I'm out of the trade. You can look at my portfolio here. I have zero exposure in oil. So I've got E-mini futures, gold. I have my micro S&P. I've got my micro NASDAQ silver, and then everything else is stocks. So if I go to all accounts here, I have zero oil exposure, and I'm actually much happier that way. So that's good. I'm trying to keep it that way. Get rid of a lot of the outlier stuff with oil. Move this over here. Just watch the floor. I mean, if we bounce hard again at the $67 to $65 zone, we bounce hard off of that. Okay, fine. But I'm not trying to call that bottom. Nat gas is also dropping, which is good. If this chart alarm goes off at $2, I would much rather get into natty gas around this like $2 zone. This would be a futures trade on NG. Not there yet. I'm just going to see if price pulls back a little bit. Gold. Gold is sitting here with a green candle on the day, not quite back to all-time high, still waiting. If it just goes sideways again, that's fine. I'll probably just take this yellow box here and just bump it up and just make it a range up there, up this way. If we range on gold, that's okay. I still want to see a dip and a pullback if we can get it. We're not getting much. Nikkei's dropping pretty hard. Is it? I mean, this market's over, right? What are you watching? Are you looking at Nikkei 225? This showed it actually was up 0.7% today. Let me see what another Nikkei feed is. So NI225 is the one I have in Trading View. NKD USD futures. Let's see what that looks like. Yeah, I guess. Down a little bit on the day. This is down 1.85 on the day. So there's your CFD. Okay, so you can see this on an MT4, MT5, or web platform. Let's see what Forex.com feed shows. Yeah, that's okay. So that's going to be the Nikkei USD futures. So NKD, I'll put that in here. I'm going to add this into the watch list. So NKD, add that, and then drag this up to, man, we got a big down on China. Well, so much for my JD looking good for an income play. Walgreens hit $10 though, so that's helping. Let's go to, where is my Nikkei? There we go. So I'll throw that in there. China, so HSI down 3.67%, Alibaba down, Baidu down, FXI down, KWeb down, JD, I've got an income play at 43. My break even's at 41. Let me take a quick peek at these. So HSI pulling back a little bit deeper, just inside that 382 to 50 zone now. Alibaba pulling back to the 30%. Baidu, son of a freaking gun, 55% now in that pullback. Sheesh. Well, tracking decline domestic stocks as China stimulus hopes or hype wanes. Beijing reportedly weighs 850 billion special treasury bonds to stimulate economy and tackle local debt. That was 6 hours ago. Huh. Well, doesn't seem like the market's too excited about that potential move, and they're probably like, prove it. Prove it before we take another round of buying. FXI pulling back to the 38%. KWeb in between the 38 and 50%. JD pulling back to the 30%. I've got an income play here on JD. I'm trying to get it called away at $43 this week. If it doesn't, I'll lower the cost basis again. Premiums are pretty good. I can go week to week. Let me see something on this one. I did this last week. I might do the exact same thing. Let me take a look at JD right here. So JD, there's my 500 shares. There's my covered income play. So that's a covered call at 43. If I just close this out, I'm not going to. If this is trading for like less than 10 cents, I might close it and just roll it. Because if I went out another week, let's go out to the 25th. I mean, I could repair this for another. This is pretty nice. I mean, I could do an at the money for like $1.30 to $1.50 to $1.70, and basically just get the stock called away. I mean, if I get $1 profit, I make $500. So that's really what I was using this for. Is I have the capital, generate some income. Looks like my trade on Walgreens is going to get called away. WBA's had a nice little pop to the upside. We're at over $10 today. Is Walgreens going to squeeze? Look at this thing. Walgreens came out with positive earnings. That is nice. Should have a big P&L swing on a couple accounts here. Let's go to this guy here. Positions. Take a look at WBA. So it's up about $2,600 on the day. This one's covered up to $20, which I don't necessarily need to sit on. I'm already up $300 on that covered call. I almost think I want to keep this uncovered. I just want to double check my cost basis. So the trade price here was 42 cents. It's already decayed. Let me check something. Okay. Nothing to do on that right now. But my break even on Walgreens is about $14 on some accounts, and then I bought it with a break even of like $8 and something, where I get it called away. So looking for income plays, looking for a little recovery. Nice to see a positive earnings report. There's a lot of upside potential here just in percentages. So do I want to do anything with Walgreens? Not necessarily, but don't be surprised if this stock does have a little bit of a drift back into the gap fill. I mean, if we get to $12, $13, that's a 24% upside. We fill this gap, that's a 43% upside. If we look at some fair market value on Walgreens, let's have a look. Price to earnings, price to sales, pretty cheap. Fair market value, $23.45. So good upside there, 60% undervalued. Doesn't mean I want to go long and go crazy. I'm generating income. That's why I did the trade at this level at, $8. So we'll see if it gets there. We get into, $14, $15. Awesome. We start making a reversal pattern of this longer bottoming pattern. Maybe gets back into 20, but not going to get super greedy on that one. Okay. So pull back today on the S&P right now. We'll see how those shape up by the end of the day. New trade in on Snap. And that's probably dropping a little bit this morning since I got in. Has dropped around 5 cents. No big deal. Anyway, I need to get a screenshot of this one so I can post it in my Pulver Alert section. We talked about it here live in the session. So there, and I'm going to talk about a profit target. Let's go profit target with, I'd be happy at, let's say, $15. And also at these recent highs around $17. So I'll turn this one into text. I'd say $15 to $17 price target. Okay, everybody see that okay? So buying shares with protection, looking to see if we get to the upside. and take a screenshot, post this in the Pulver Alerts section. Okay. A couple more things. Today, for all you that are interested, I have a bonus session. I'm going to talk about some top strategies at 4 p.m. today. So my schedule will be as follows. At 3 p.m. Eastern time on my YouTube channel, I do a final hour session. So final hour, that's going to be on my YouTube channel, which is youtube.com/Chris Pulver. And then at 4 p.m. Eastern time, I'm coming back into the A1 Discord, the A1 Trading Discord. So A1 Trading Discord for a live session inside the Discord channel. And I'm going to do a top strategy bonus session. So for anybody that's in the A1 Discord trading community, if anyone has my Pulver Alerts, great way to jump in. Let's talk shop a little bit. So I'll be live for a couple hours later in the day. All of you are welcome to join me. My YouTube channel is free. As long as you're part of the A1 Trading Discord, that session is free. But yeah, so obviously we're active trading. I'm just going to talk top strategies in trading Forex, top strategies trading stocks, ETFs, trading options, kind of my go-to plays. And hopefully that will be helpful and useful. And I know a lot of traders out there. I've had a lot of feedback asking for more options. Some people have never traded them before. Some people have traded basic options. Obviously, I do a lot of, a variety of strategies that are kind of all over the place, from debits to credits, in the money, out of the money, all this type of stuff. So I'm actually in the process of working through, I'm calling it practical options, but I'm just going to build an entire options course where I can talk about all this stuff. And I want to break down all the barriers and the learning curves that option trading has, like this enigma where it's like nobody knows how to trade it. It's so confusing. It's so difficult to learn. It's really not. If you just think about it practically with how you're trying to, how you're trying to express your trade in the market, you can trade anything you want with options. And the nice thing about options is you're able to set up trades where you can risk a lot less, tie up way less capital, have leverage, make more money, generate income. And that's why I trade it. So it's a nice little blend to me, just owning shares, which I own way less than I do trading options, because typically what I use option strategies to kind of mimic and synthetically replace owning shares, and I can do it for a fraction of the cost. Okay, but there's timing involved, and there's other things that factor into it. But I do trade a lot of options for income generation. I trade a lot of options to basically replace owning shares and do it with way less cost. So if that is something that you're interested in, then join me. So that will be, again, today, my YouTube channel at 3 p.m. And then once we wrap that up, probably around 3:50 or so, 3:55, I'll jump over into the A1 Trading Discord, and we'll go live and we'll talk top strategy stuff for probably an hour or so. Cool. All right. So we can talk about that before I bounce out. I'm not sure if Nick Phillips is coming on after me, but I'll go for a few more minutes. The other trade I want to take a look at today was Tesla. I see somebody asking Dave. I'm going to stay out of that, Dave. I mean, it seems to be a little bit more directional right now, right? I mean, we saw the market drop, 30 points or so. I'm good just waiting to see if price will settle. So for example, let's go to the SPX. What I want to see is this. If price is high to low and things are looking like it's going to go sideways, then sure, maybe looking at another daily profit play there. Okay. But I want to see price cooperating, because this could also be a, break. If we establish a little bit of choppiness here, that's fine. And this market can finish where it started, or this market can break and go lower. I don't know what we're going to have directionally today. I'm just happy that we get out early this morning with a couple of winners, right? Okay. Can I check on NIO? Yes. And Michael asked, do I use the Edge Finder? Yes. I reference their top setups. I like to look at the commitment to traders reports. I like to look at the trends in, the employment, non-farm payroll, inflation data, all the things they pull and, grab all this great information and put it all in one place for you. I mean, Edge Finder's great. Absolutely. Okay. NIO. Sure. Let's take a look. I'm not really loving the EV stuff at all. I mean, there's a time and a place for it. NIO is one that, I mean, I guess you could justify this as it's low risk, right? If I bought 100 shares and it's going to cost me $500, $560, that's pretty decent defined risk for the stock to essentially go to zero. But the upside potential on the stock is pretty fantastic if there's ever an upside. Let's have a look at it. Okay, so NIO right here. Again, I don't love this. Volatile share price, currently unprofitable, not forecast to become profitable for the next 3 years. Revenue is growing, but it is in the tech space. EVs, had their fun in the US, but they're not really coming back in a big way. I've steered clear of EV stocks after, having a lot of profit on lithium and a lot of profit on EVs. And then once the 2022 bear market started, we didn't really see a recovery. Price to sales, price to earnings, dirt cheap. Valuation wise, doesn't even give us a discounted cash flow model because it's China. So I don't really have a number there. Now, that's not fair because on some ADRs like Alibaba and Baidu, fair market value on both of those are way higher than current prices. But this one shows that's not available. Okay, insufficient data to calculate the fair value and the valuation analysis. Okay, so be it. Pure average 2.4, NIO is currently 1.4. So I look at the stock this way. It's not something I'm going to trade necessarily with options outside of going like a dirt cheap in the money call option. If you like NIO and you're like, here's the other reason too. NIO, have you seen the cars that they make? This isn't just some like, tiny little like $15,000, $25,000 car. Like NIO is making like these crazy luxury cars, aren't they? NIO home power. Let's go NIO EV vehicles. I thought their vehicles were pretty expensive. I could be wrong, but I thought this was one where it's like crazy expensive. I mean, okay. I'm looking for prices here. And also, I mean, it might be China and Europe, maybe, that buy this. Like, I don't think NEO or NIO is coming to the US unless you're going to see just crazy tariffs. That's if Trump is elected. I mean, we're going to have crazy high prices on Chinese imported cars. But anyway, some of these, I mean, these look pretty darn fancy if you ask me. So this is saying, like, I've traded Fisker in the past. What Fisker? Have you ever seen one of those cars? It looks like a supercar. It's kind of a Tesla competitor, but they're broke. So I don't know if the market that I want to be in is like, let's have a $200,000 vehicle. Let's have a $150,000 vehicle. If that's what this lives and dies with, I mean, same thing with Rivian. Rivian makes a $100,000 to $150,000 vehicle, and they lose $30,000, $40,000, $50,000 on every vehicle. Now they're supposed to be making a more economical vehicle, maybe of the 80 to 60K range, maybe slightly cheaper, maybe. I don't know. But if you have to buy a car that's $150,000 to $200,000, I don't know. I'd rather invest in what's going to be mass produced, inexpensive. What gives you market share? What are units you're going to see all over the road? And I don't see these fancier cars being all over the road. They might look nice, they might drive nice, but anyway, risk on NIO would be this: you buy a stock, it goes up, you make money, it goes down, you're risking $560. It's calculated risk. That's the good and the bad. So if I were to take anything with it, if it's down, I'd say this stock goes to zero. That's my risk. This stock goes up at all, you're making money. That's defined risk. It's kind of wild because like maybe this just goes to zero. Maybe this gets delisted. I don't know. But that's a risk you got to be willing to take if you're trading that. Okay. Exactly. They're not going to. I mean, we have, look, our country, our middle class, not anymore, but our middle class was built on automakers and manufacturing. And yeah, your Fords, your GMs, your even Toyotas are mostly in the States now. Yeah, nobody's going to be excited about watching a major, foreign automaker come in and take up market share when you've got major automakers trying to do the same thing. Tesla's been disruptive enough, and they're here in the US. So anyway, that's my 2 cents on NIO. Is I would just say if you like it, it's to find risk to let it go to zero. It goes into the upside, you're making money. Otherwise, that's it. I wouldn't trade options on this one necessarily unless it was a dirt cheap call option. Something like this, I'll take a look at the stock. NIO, if it has options, which it does. If I went out to January of 2026, which is just over a leap, I bought something dirt cheap. I could buy a 80 Delta call for $2.75. Now you're paying a little premium on that, Okay, it's actually slightly cheaper. Let me do the math here. If I bought a $4 for 275, I'm looking at 675. If I did a 3 plus 3.30, it's actually cheaper to buy a $3 or even a $2 call, but it's more expensive. So for $330, I could essentially buy an 87 delta. If the price goes higher at all, that 87 delta turns into a 90 plus delta, turns into closer to 100 delta, which essentially means for every dollar that the stock goes up, you get $1 of credit to your call option. So if I bought like a $2 call for $405, that's cheaper, but that's a 93 delta. Okay. So based on the numbers right now, this isn't a bad play. I buy a $2 call option for $4. Okay. And that $4 option is trading at a 93 delta. Well, any upside here, that 93 gets closer and closer to 100 delta, which means it's the same as owning the shares. Now, I could do that for $400, okay, as opposed to $570 to represent 100 shares. Okay. The difference is if I own the shares, there's no worry about the timeline here. If I buy the shares out to 2026, we've got a long time before the price decays and that value goes down. So if there's any upside to this, cool. Right? You could be in this window where there's upside before you get that like heavy time decay. But it's cheaper. It's cheaper to buy a call option than it is to buy the shares. Okay. All right. Bitcoin, yeah, Bitcoin's had a nice little run. Bitcoin's been doing great. Bitcoin's up to 67K right now. Did it just pull back in a nasty way? Well, take a look at the chart. Okay, I haven't had to do anything on Bitcoin other than watch this accumulation circus. By the way, let me know if I need to go. Chandler team, if I'm going long, just let me know. I can bounce out here. But I just have the same chart up here. Resistance has been seen since the highs. We came all the way up to 67 and change. We're showing a very aggressive candle here on the daily time frame so far. So okay, I'll go until probably 11. If you're good with it, I'll go like 11:10 or so, 11:15. But I don't think there's anything really to do on Bitcoin outside of sit and wait. Maybe come back into this area here. If we get a rejection, pull back into this area, see if there's more accumulation. I think the big break on Bitcoin is probably going to be post-election, to be honest. If we have any upside here, more than likely these order flows, like that's a good push. That really is. That's a pretty strong move on Bitcoin from 58.9 all the way up to 67. That's a 15% rip, So, I mean, it's fine. But if we end up going and hitting resistance and then pulling back into the same levels again, well, maybe there's a chance to consider dollar cost averaging. I just think the better play is if we break out, that's where it's going to get more exciting. Until then, all this is to me is indecision. Excuse me, indecision. Right? But we've pulled back and we've tapped this efficiency here. We tapped this efficiency here. Like these are really good structure levels from this bull market that if we accumulate, I'm just waiting to see where are the bulls able to take control. I like this pattern right here. Okay. I like this trend line out here. So if we actually do make a break for it and it stays supported, I like long. And we'll see if this gets more, really bullish. But right now, it's still an accumulation phase for me. So I'll watch. The nice thing is some of my exposure on Bitcoin. So BITO is up to 1861, but pulling back. My IBIT is pulling back. My MSTR is pulling back. Let me see what the MSTR right now, the IV's at 67. I would love to see MSTR pull back into the hundreds again. Now that they did the 10-for-1 split, I don't mind doing a 160 or 150. Looking at some income strategies there in the low 100s. I'm certainly willing to own some MSTR in the low 100s, but I would definitely be using options to lower my cost basis on that. Okay, let's take a quick peek. We looked at gold and silver earlier. I just want to revisit this. Silver seems to be pretty steady. Okay, gold, same thing, pretty steady. Bitcoin was up. It's fading quickly. Ethereum is hanging in there, but probably fading a little bit because Bitcoin is dropping as well. Copper still dropping hard. I canceled that credit spread on copper. I still have a trade in that's looking pretty good for some profit here. Let me go to copper. If I go positions, where are we at? Copper is going to be HG futures. So I've got a 3.2 by 2.5 currently showing about $980 a profit. That's good. This actually expires in 2 weeks. It's doubtful that I'm going to have any threat in this position. So I have a naked put at 3.2 and long puts the hedge at 2.5. This is probably in, I mean, it's in a decent amount of profit. I've received about 84.5% of the profit on the put side, and I'm looking to maintain that. So let's keep an eye on this one. My max profit in this one, if I take that trade there, it should have been like a $250 to $500 position. Let me double check. If I go back to copper here, it doesn't show up. When did I place this trade? So 0.005 on the credit, 0.001 on the debit. So 0.004. Let me just take a similar trade, I guess. So if I did a bull put spread here for 0.004, that income should be 100. So it's a $300 profit. I was just doing the math on it's a weird calculation. So yeah, it's about a $300 income trade next week. Okay. So what to do for the remainder of the day? Pulling back. NASDAQ still down over 1%. Let's have a look at this. Was this a bit of a fake out trade in the NASDAQ? Yeah, maybe. Maybe. Or is this the pullback that we still have to pay attention to? Okay, look at our levels. So the 50, the 100, the 200 EMA, we're trying to get back to these all-time highs. Pullbacks are fine. I like the pullbacks to this recent FOMC level. If we pull back there, there's still some upside. As long as we maintain this trend line posture, we're trying to go to higher highs. I did say yesterday the markets are overextended. Okay, they're a little overvalued, but the markets can stay overvalued. They really can. This is what I thought was interesting this morning. The most negative earnings revisions since December of 2022, potentially setting us up for a slam dunk earnings season with a low bar to beat. So your earnings per share, your earnings per share, and your revenue expectations for earnings season that's happening now for the next like 30 to 45 days. All those earnings estimates have been revised lower. So if they're revised lower, I don't know if the market looks at that as like, consistently beating expectations, like, oh, beat forecast. Maybe that's a good thing. So just a data point. Best run since the election year, since 1936, best run in the S&P ever in an election year. This I thought was interesting too. We all know as a longtime investor, it's pretty much you're likely to make money if you just stay invested. If you got a 20-year horizon, okay, you're 100% probability of making money. If you have a 30-year horizon, 100% chance of making money in any period. You can invest in the worst possible time, the Great Depression in 1929, the top in any wartime, the highest of inflations, the lowest of inflations, the highest of monetary policy, the biggest recession, the Great Financial Crisis. We don't quite have that 20, 30-year stretch post-Great Financial Crisis, but this is what's crazy. It's not a straight line. Any investor in U.S. equities would have been in a drawdown over 90% of the time. So what happens is you buy, you're in a drawdown, you make money, okay? You make money. There's always going to be ebbs and flows to the market. These drawdowns are pretty massive, right? This is back to 1931, an 86% drawdown in the equities market. 20, 27, 33, 45, 20, 33, 47, 55, 34, 24. This is the risk you got to be willing to take. Okay. Right now, the average for the last 20 years, Ben, you're averaging about 10% gains. Okay. So about 10% upside for the last 20 years or so. And your drawdown has been around 13 to 20% on average. So you're still getting a positive 10%, but you got to be willing to stomach a 13 to 20% drawdown. That is a risk-adjusted return. Okay, that's what's been happening for the last 20 years. Could it be more than that? Could it be less than that? Well, if you look at the last decade, the S&P's averaged about 16% returns. Now, that's certainly come with some bigger drawdowns. We had a 25 to 30% drawdown during COVID. We had a 25 to 30% pullback in 2022. So same type of thing. I mean, you've got some upside, but you're managing the downside, probably 20 to 30% pullbacks, right? So you got to risk it to get the biscuit, as they say. Okay. All right. Anyway, that's what's going on. Let's talk gold, silver. I'll just repeat this for a moment. Gold hanging in there. I still want to see pullbacks into my moving averages. Silver, I'm liking the structure on silver, bouncing off the 50 EMA. And also, if it holds this level, okay, meaning this, I don't want to see this be resistance. I want to see this as we're breaking here, we're pulling back and accumulating, and then we get another notch higher. One of my bigger positions that I still want to run with for the rest of the year is SLV. My SI futures looking good. And so I'm going to continue to let those futures decay and give me some credit spread profit. And then my SLV long and my GLD long, if they go to higher highs by the rest of the year, that's good. Hopefully they do. So if I get another, I mean, look, two more kind of bursts for me in the portfolio this year would be if Bitcoin is going to 100K this year. Okay, I'll be very excited for that. If silver gets to $36, I'll be very excited for that. Right there, those two alone, if that happens by the end of this year, this is probably worth about 50K for me. And Bitcoin is probably worth maybe the same in profit. So, I mean, that's a pretty good chunk of profit to still be in addition to what I have right now. So, yeah, I mean, I would love to kind of hold out and see if this does happen, because this is just another kind of alpha boost to my portfolio. If I get another 100K initially, let me see what the numbers are. It's going to be maybe like 8%. Okay. Where did I started this account around 1.6 this year. So 100K. What am I looking at? By, yeah, about 6.3%. I mean, that's good. That's a great boost to my bottom line if just the prices cooperate. And there's a lot more income potential with once we have confirmation. I mean, silver is pretty solid. I mean, I don't necessarily want to go into SI or futures and say, okay, what else can I do on silver? I mean, I could get in here with like a $30. I'll take a look at it actually. I know I have some expirations on silver that are staggered out. So I've got December, I've got January, I have November 25th. I mean, I have some of those major expirations on silver. And that's really only the options that I have right now are what I'm already trading. So I don't really want to go out. I could go out to January. That's fine. Let me try this actually. What does January look like? If I put in an at the money on SI, where are we trading at right now? Right here. So if I did a bull put spread at the money, I'm getting about, let's see, $725 profit for a 535. So 0.14, 0.15 fill. But I'm looking at the price level on SI. As long as we stay above $30, I'd be pretty happy. So let me see if I can get this thing to fill. If I go, I mean, even this trade's not bad. If I did a bull put spread, let me see if I could move it down one. So I still get more in reward than risk. If we're by January 28th, if we're higher in silver, I make 690, I risk 560. That's not a bad trade. The issue is I'm not taking any assignment here. That's a good income play. It's not too bad. I'd like to move this a little bit lower. So if I did like the 29.75 by 30, but now I don't want to take this fill because now my risk is 775 for a profit of 475. So I'd like to get this filled at like 14 or 15 cents. So if I want to go out of the money, I would consider doing this on silver. Okay. So I would adjust this. I like the strike prices here, but I would change this to a 0.14 fill, which means that price would be pulling back and I get filled on silver at a price that would offer me a greater reward than risk. I want this to be greater, right? And right now it's not. So I'd have to let this be a higher credit, which means I can do two things. One is I can do this closer to the money right now and see that I'm getting a slight edge in reward to risk. And this is an income play out through January 2025. Not a bad play. Okay. Or if I had any pullbacks here, if silver were to pull back, let's say to, these moving averages, as long as we bounce off of those levels, the nice thing is it's cash settled. I'm not getting assigned early or anything like that with a futures market, and it's risk defined. So it doesn't take up a lot of buying power. Could I see some choppiness coming? Could I see some pullbacks coming? Yeah, maybe. But I still see this $26 zone as pretty well supported on silver. I'd love to see it go higher. 35 plus is a measured move. Yeah, I mean, if we're still in this wave 3, wave 1, wave 2, trying to get a wave 3, if this is a wave 4, I don't know. It's interesting wave structure, but I'm just trying to let it do its thing. Okay. All right. So thinking about some futures trades on SI, I might put in this trade as an income trade, slightly higher reward than risk. If I get filled, I'm getting 670 in profit for 570 risk. Not bad. Make an extra $100 or so, 130, 40 bucks or so. If I get a fill on a lower price, like the 30 by 29.75, and get that filled around the same price, that's even better. If you want more profit, this is 720 reward for a $500 risk. That's better, but now I need price to actually move by the time I get to expiration. Okay. All right. Is gold going to drop? Maybe. I think gold is just going to drift. I mean, if we go sideways, I'll do the same thing I did here. We had a sideways range on gold. If we have a sideways range here, I'll move this box up and we'll watch the box. I still think there's a potential like snapback on gold to look for a buying opportunity. Look, is everybody ready for fast and ugly and nasty short-term volatility? Because we can get it on earnings and we can certainly get it during the election. So Tuesday for election day, that week, that first week in November, we're also having FOMC, and I'm not mistaken, we're going to have a non-farm payroll that week too. Like, I would buckle up for volatility that's only a couple weeks away. So if this market is choppy and indecisive, I mean, there's going to be reasons for the market to stay tight and stay choppy and stay indecisive for the next 2 or 3 weeks. There's going to be some earnings plays here and there. There's going to be some catalysts there. That's fine. We can trade those. Those are kind of one-off events. But when it comes to the broader market and the bigger order flows and whether we hit higher highs by the end of the year or we don't, I think all this is waiting and pending the election. Not that the election is going to be like this massive event, because I don't know who's getting the upper hand right now. Is it favoring Trump, favoring Harris? I don't know. Okay. The market's going to like gridlock most likely. The market's going to like to see some type of, it's not just full Republican, it's not full Democrat. There's no major policy shifts. Fiscal spending is still going to be a thing. Foreign policy might enact some type of policy changes, but I don't know. If we don't really have a full kind of majority, all Republican, all Democrat, it's going to be the same old. So, I think historically the incumbent, if they win, the markets tend to just take that in stride. They say that, if Trump wins, that, tax cuts would be tax cuts are good for whoever they get, probably corporations, probably the higher end of the spectrum as far as earnings. Corporate tax rates being lower as well should be good for companies, should be good for investments. It may not help the middle class. It might be a big tax increase to the middle class. Usually that the Republicans are favoring top-down economics, and it's good for business, but may not benefit the lower middle class. But either way, it's socialism both ways. It's socialism for the poor from the Democrats, socialism for the wealthy for the Republicans, and that's pretty much whoever you decide to vote for or side with, that's what you're voting for. Either way, the government's going to spend money. Either way, our deficit's going to grow. Either way, our debt's going to grow. And that's going to be something that is a reality check later on, but who knows when? Nobody knows when. Right? All right. So real quick, just a snapshot of the markets. SPY is down about 0.3%. Qs are coming back a little bit. They were down over 1%. We're seeing some wick action here on the bottoms. I'm just going to stay patient, Stay patient. We got some all-time highs in the NASDAQ. That'd be nice to see them hit again. The Dow, still green on the day, but not quite to all-time highs. The Russell, 1, 2, 3. Wow, this Russell's been making a nice little move there. So that Russell is up about 4.3% over the last 4 trading days compared to others. I would say I would be shocked to see if any other index performed the Russell in the last 4 trading days. That is up 4.4%. Okay, Qs for the last 4 trading days. Today's obviously red, so 1, 2, 3, 4. We go from this low to this current price. The Qs are only up 0.92%. The SPY, since we had a pullback today, 1, 2, 3, 4. SPY's up about 1.38%, and the Dow, usually, even though this thing looks like, oh, it's performing so well, it's probably still lackluster. 1, 2, 3, 4. So we have this low to this current price up about 1.5. So the Dow is actually outperforming the S&P and the NASDAQ. The Russell is outperforming all of the major indices for the U.S. And that's good. That's not a bad thing. Russell performing well is good. That's market broadening. That small caps benefiting. I don't know if the Fed has changed much from the interest rate side. We'll take a look at yields before we go. I know I said I was going to cut it off. Now there's a 90+% probability that we cut 25 basis points for November, and another 82.5 we cut in December. So the Fed still looks like it's cutting for this year, but that's your smaller, more like bite-sized pieces as opposed to your bigger jumbo cuts that we did back in September. But it still seems like the Fed's going to be cutting another 25 basis points. And if we take that and extract that into yields and bonds, the 2-year flat on the day, the 10-year pulling back decently, 20-year pulling back decently, 30-year pulling back decently. It bonds up today, fractionally. Yeah, just not a lot of action here. TLT for a moment on the 20-year bonds. I would like to see maybe another position in here. If we pull back to like $88 on TLT, I'll probably look at some type of trade in there to get long. Area 1 or Area 2 bouncing off those 2023 lows. That's about it, though. Okay, and then dollar index, and I'll wrap it up here. I see dollar index. I saw euro dollar request, which is essentially the inverse of it. And the dollar index is still this yellow. Look, the yellow box for me is where I'm looking to sell the dollar index. So we're in it. What I'd be looking for is on a smaller time frame, some type of confirmation to sell. So it's in a space where if I was selling the dollar, I'm looking for confirmation on lower time frames. I'm looking for stop losses that are relatively tight. Okay, or you just wait. If this is here and sideways and indecisive, we box this in, look for a breakout, and then see if this returns and resumes back to the lows. I think this is the best path forward for a higher stock market by the end of the year. The one thing that would be odd to see would be a higher dollar and a higher stock market, because eventually something's going to break. Either the dollar gets really weak in order to keep the stock market going, or the dollar rips enough and the stock market's up on these kind of balloon numbers, and then reality checks later. But I'm not forcing sells on the dollar. So therefore, euro dollar, it's already been short, right? This is a pretty good range on euro dollar. I don't want to touch this thing because it's in the middle. I like this resistance zone. I like this support zone in the middle. I'm not that interested in fighting through all this. All this is chop. So I don't have a good direction. I'd rather buy it low. I'd rather sell it high and just stay out of the middle. So there's your euro dollar. Got to wait. You got to wait for a cleaner setup. Okay. All right. Anything else for me today? Otherwise, I'll wrap it up. Just a recap for the day. Took a trade on SoFi. I'll update that. I took a butterfly call spread on SPY. I'll update that. I'll put that in the Pulver Alert section. Today at 3 p.m., I'll be live on my YouTube channel just for a final hour session. And then at 4 p.m., come back and join me in the A1 trading community on their Discord. We're going to go live into the room. It's going to be right here. So if you're in the A1 trading Discord, I'm going to come down here and kick on a live trading room, and we'll talk shop. Okay, that'll be at 4 p.m. Eastern time today. Sounds good? All right, and I'll be talking top strategies, what I like to trade, how I like to trade them, and we'll have some fun. Okay, sounds good. All right, thanks, everybody. Have a good rest of the day. We'll see you tomorrow. Bye.
Thank you for watching today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. We're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. You can fill out an application with the link in the description below. That's all for today. Trade safe, and we'll see you tomorrow.